Stocks swing back strongly to lead the Nifty to record highs, with gainers significantly outnumbering the losers today. Even as the market corrects from the day's high, power and realty stocks lead the charge, while FMCG and healthcare bring up the rear.
Strong sales across the auto industry. Two-wheeler companies like TVS, Bajaj and Hero see 23 to 25% growth in the month of January.
The Paytm management in a call tells analysts that it hopes to shift all businesses from Paytm Payments Bank to other banks soon to ensure continuity of operations, but no clarity on the cause for RBI's strictures spooks the street today.
And Castrol gains on a sharp uptick in margin. Abbott India too sees profitability jump, but a sharp cut in margins hurts Rights India.
Hello and welcome. You've tuned into Business Lunch on this Friday afternoon. I'm Nisha Podar. With me, as always, is Pavitra Parekh. So, Pavitra, finally, final day of this particular week.
What a long one.
What a long one, with so many events and so many really news flow to really digest from. And some of them are having their huge impact today. But all in all, it's been a fabulous day, a record-breaking day for the market. So let's take stock of that. Of course, Nifty 50 is off the high point of the trading session and the records that it hit, but still holding on with almost 1% of gain. So let's take stock of the market at this point in lunch hour today. Still fueled up, 21,900 level on Nifty 50 with over 200 points gain at this point. Sensex 2 gains over 600 points. Bank Nifty, that is showing slight underperformance to the key indices, but still holding on good with over 0.5% gain. And so is the case with the mid-cap universe. So all in all, the screen is looking extremely green and buoyant today with more advancing stocks. And that's not a surprise coming in. So there is market strength really building in. Some of the counters like BPCL, Power Grid, ONGC, NTPC, so all PSU stocks are really roaring in trade today, and some of the big heavyweights are putting a lot of might behind the market momentum. Eicher Motors, HDFC Life, Hindustan Unilever, and a couple of banks like Axis Bank, HDFC Bank are the laggards in trade. Pavitra.
Well, you absolutely said it. The PSUs are where a lot of the action is and where it's sustaining, whether you look at the large caps or in the broader markets as well. The Nifty CPSE index is up almost 4% today, 3.5%. If you look at it for the week, it's up 8.5%. That is the kind of force that you're seeing in this entire pack of stocks. So the large caps, of course, it's, include BPCL, ONGC, and you have a few more Power Grid as well. But I do want to mention that there are a lot of others which are surging on this budget news as well. So names like SJVN, NHPC are seeing a big move higher. You also have a lot of stocks reacting to their earnings on the upside. So names like Castrol, Abbott, all seeing a very good move. And, speaking of PSUs, I just want to mention that some of the banking names, the smaller banking names, are just having a completely solid session. So Punjab and Sindh Bank, PNB, Bank of India, all of these seeing a good move higher. I will mention that the pullback that we are seeing has been, concentrated in some of the larger names. So you have names like, some of the larger banks. So HDFC has pulled back quite a bit. ICICI Bank around 1.5% from the highs. Reliance is still holding up quite well, but it has slipped from the highs, which is why you're seeing this kind of move on the index. What's under pressure? Of course, Paytm and a lot of the railway stocks that have been running up, in addition to some of the consumer names that Nisha was mentioning. So that is what's going on with the market. We will keep talking about this, but let's kickstart the show by talking about Paytm, because shares are locked in a lower circuit for the second straight day. And this after the RBI imposed major restrictions on Paytm's payment bank. Paytm has said that this will result in an annual EBITDA hit of 300 to 500 crore rupees. And the founder, Vijay Shekhar Sharma, has called this a big speed bump, but he thinks that they will be able to navigate this. So let's actually listen in to a small piece of that conference call where he was addressing analysts.
Going forward, the keyword is that we will not work with Paytm Payment Bank, and that is what probably means that other banks will come. Paytm, I can say that it is more of a big speed bump, but it is something that we believe that with partnership of other banks and capabilities that we have already developed, we'll be able to see it through in next few days or quarters, as the case would be.
All right, so that's the word really coming in from Vijay Shekhar Sharma after the big news on Paytm. And take a look at this particular stock. There's no let up in sight. It's 20% down since the opening of the trade today. In fact, our colleague Ritu Singh had really attended that particular con call and gets us all the key highlights and the understanding of way forward from here. Tell us, Ritu.
Well, Nisha, in terms of way forward, there was actually little from the management yesterday on that hour-plus-long con call, and I think that's why you're continuing to see pressure on the stock even today, down 20% yesterday, down 20% again today. The big takeaway from the con call really was that, one, they're already starting to work with other banks because of the embargo on Paytm Payment Bank to ensure that there is business continuity when it comes to the other functions of Paytm, that they're immediately starting to comply with RBI directions, although, be very clear that RBI has not indicated in any manner whatsoever that if Paytm were to comply, they would lift the embargo. So that wording itself was missing from the notification that, of course, RBI had publicly disclosed earlier. They said they're continuing to decrease their dependency on Paytm Payment Bank. Vijay Shekhar Sharma calling this a big speed bump, but one that they will be able to navigate in the coming few days or quarters, he said. How, it remains to be seen. As far as, the reason for the action, which several analysts asked him through the course of the con call, the management maintained that, there have been some compliance issues, which RBI has publicly stated as well in the notification. But beyond that, there's been no further engagement with RBI on this matter. Another important takeaway is the management saying that there will be a temporary hit on the lending part of the business for now. Remember, the payments bank itself cannot lend. It only facilitates transactions. But the lending is done in tie-ups with other NBFCs, etc. That may take a hit for the next couple of weeks, where we'll not be originating any new loans. Other than that, businesses remain unaffected. But really, we'll have to see when the embargo lifts, if at all it does. No visibility yet on that part of the hit on the business, even though the amount is about 300 to 500 crores.
All right. Thanks so much, Ritu, for putting all that into perspective. So uncertainty on the way forward and very little information on that is something that is really spooking the market. Looks like a deja vu. The stock is not too far away from their all-time lows and looks like the kind of crash that we had seen on the listing day as well. So a lot of roller coaster ride for the investors in Paytm, which is a fairly newly listed company from the space of the new age companies. So next up, also let's figure out who are the investors that are invested, the mutual funds who are really taking this beating because of the news developments at Paytm. And Pavitra tells us more about that.
Nisha, you were mentioning the stock price is down 40% in 2 days, 77% from its IPO price. But if you look at the mutual fund action, they've been picking up stake in Paytm. So right now, 68 schemes are, have exposure to Paytm. The total amount is around 2,000 crores. It's not a big amount, but if you look at, just the move in terms of allocation between September and December, it's gone up by 77% for the mutual fund industry. Allocation is higher in active funds than the passive funds, and some of the larger exposed funds will come up for you. So what has the highest exposure? It's the UTI Innovation Fund, around 4.8%. You then have two of Quant's funds, Nippon and Mirae also factor in that list. So that is the exposure of active funds. Let's also look at the passive side. Here, the maximum exposure comes in from the Tata Nifty India Digital Fund. It's at 2.9%, and some of the others between 1.5% to 2%. Now, I just want to go back to the allocation that we were talking about. The total mutual fund industry, exposure to Paytm in December of 2022 was just around 1.73%. It has gone up slowly. In September of 2023, it went up to 2.8%, and then you can see that big jump come through on your screen. And in December 2023, it's at 5%. This is the highest that it has ever been. Let's further look at the December quarter, because the big jump again comes in the month of December. So it was at 177 crore shares in the month of September, and then by the time we got to December, it was at 315 crore shares. So that is the kind of exposure that the mutual fund industry has. The number is not big, but it has gone up very significantly in the month of December.
That's right. The mutual fund industry has been ramping up its stake also because, Pavitra, a lot of venture capitalists has exited and there were a lot of block deals after the lock-in periods ended. Yeah. So that's also a reason, a large supply and the institutions buying it. All right, moving away from Paytm, which is our top story for today. Next up is Indian Hotels, which is higher in trade on the back of its strong Q3 numbers. And Mangalam Malu is right here with all the details on that. Tell us, Mangalam.
Well, extremely strong numbers coming in from Indian Hotels, a record revenue, record margins, record EBITDA and record net profit as well. And it was expected to be so. But what interesting is that the company's targets for next year are equally strong. They've looked at double-digit consolidated revenue growth in the next year. And if you add to that the new hotels that the company is adding, the revenue growth could be over 30%. They're targeting more than 2 hotels to be added every month. And they have strategic cash reserves as well of almost 1,800 odd crores. They will be launching new hotel brands in Tier 2 and Tier 3 cities. Ginger brand itself could be more than 600 crore worth revenue generations in the next 1 year, along with Taj Sats, which is their air catering business, which could cross that 1,000 crore mark in terms of revenue too. And they would see good growth coming in their new verticals like Cumin as well as AMA or AMA Homestays. Let's also hear out what the management had to say to CNBC after the results.
We have opened 16 hotels this year. We have a pipeline of 85 hotels. We are well positioned to achieve 20 hotel openings this year and going forward a minimum of 2 hotels a month in the coming 3 years with the pipeline that we have of 85 hotels. And most of that is on a fee-based business, so it balances our portfolio with the asset heavy and asset light with the guidance that we have given. With the new scheme of the government of building 50 new airports, we'll also need new hotels. So I think all in all, the whole cycle of, doing the business with the airlines, with the airline passengers, with the meals in the air, all this is going to grow at a very rapid pace in the next decade, I think.
This is the word coming in from the Indian Hotels management, but we are going to get into a short break now. On the other side, we are going to focus on Tata Motors and SBI. They're expected to report Q3 earnings today and tomorrow, so we'll get you the key expectations when we come back. Welcome back. You're still tuned into Business Lunch. By the way, the market has pulled back a little bit more right now. It's down 280 points from the highs of the day on the Nifty. So 1.3% gone. They were holding on with just a 0.7% gain right now. And it is the banks which are pulling through. The Nifty Bank Index is completely flat right now. So it's given up a lot of the morning gains. We'll talk more about the market. But first, onto the macros. And this is some important information that we're getting. The government's market borrowing will be lower in FY25 as the government prepays GST loans from compensation cess. So Sapna is here to tell us more about this. Sapna, what are you picking up?
Yeah, hi. So basically, the intent of the government is very clear, and the numbers are all out in the budget. Secretaries and the finance minister has dwelled on them in detail yesterday. Just to put things in a perspective, so market borrowing for FY25 after a very, very long time is actually on the lower side. It's, I think, almost 1 lakh crore lower than the numbers for the current financial year. That's the big one we talk about. So what we have also been given to understand is a major reason for that is the fact that the government will not be depending on market borrowings to, basically pay back the GST back-to-back loans, which had been transacted by the central government on behalf of state governments because of the GST shortfall that had happened in FY21 and FY22. And that's a big amount. Just to put things in a perspective, 2.69 lakh crore had been borrowed. Now, because of the revenue surge, what's happening is the government is now prepaying those loans. And that money is going from the own cess compensation collection, which again for next year is a massive 1.5 lakh crores on the back of excellent GST numbers which have been coming in. And similarly for current year also, 1.45 lakh crore is the GST compensation thing. So just to put things in a perspective, they are not depending on market borrowing. This entire prepayment is happening from their own funds. It's not being taken from the consolidated funds. The Fed is taking care of that. And consequently, the benefit is basically lower debt implications for state governments, lower borrowing costs, and the fact that it's a right signal for the markets which has to be taken on board.
All right, Sapna, thank you so much for all those important details coming in on government's borrowing program for this particular year. All right, moving on then to earnings, and big boy from the banking space, State Bank of India is expected to report its Q3 earnings tomorrow, and Abhishek is here with the expectations on what could we expect for this quarter from SBI, which is today up in trade over 1%. Abhishek, tell us.
Watch out for the net interest margin. Our poll suggests NII growth on a YoY basis to be the weakest or the lowest in last 10 quarters, and profit growth for the first time on a YoY basis may decline or see a negative return. So the key thing to watch is that they will have a one-off with respect to wage provisions which will be made in this quarter on account of the wage revision rate that's been done. Net interest margin can be under pressure. Analysts estimate net interest margin to decline anywhere between 18 to 20 basis point YoY and about 5 to 8 basis point on a sequential basis. Loan growth is seen at around 14% YoY and about 4% sequentially. So loan growth sequentially can be on the stronger side. Slippages expected at about 5,000 crore as per ICICI Securities estimate. This was about 4,100 crore in the previous quarter. So no hiccup in terms of slippages seen. Asset quality expected to remain stable or improve. Motilal Oswal expects gross NPA ratio to be at 2.4% versus 2.6% in the previous quarter. Now the treasury income could be weak. This can impact the operating profits. So Kotak Securities estimate operating profit decline of 18.3% YoY, but it may be up about 6.2% sequentially as per Kotak Sec. Management commentary with respect to growth outlook will be seen closely. Our poll suggests NII growth of just 6.3% YoY and 2.2% sequentially. We are working with a profit decline of 5.9% YoY and about 7.5% sequentially. Back to you.
All right, Abhishek, thanks a lot for laying out all of those estimates for SBI. We are going to watch for those. That is the big earning, which is, of course, due tomorrow. We need to get into a short break now. But on the other side, the U.S. takes action against Israeli settlers accused of violence against Palestinians in West Bank. So we're going to bring you all of the details on that story when we come back.
All right, on Business Lunch, let's focus on some of the important global developments of the day. And let's get you the latest from the ongoing tensions in West Asia. Hamas is continuing to weigh in a ceasefire proposal as diplomatic efforts for a truce in Gaza ramp up. Meanwhile, President Biden issues an executive order targeting the Israeli settlers in the West Bank, accused of violence against the Palestinians there. NBC's Matt Bradley reports on the on-ground developments.
Two twin initiatives by the Biden administration on the topic of Middle East peace, and both of them are going to be seen here in Israel by Prime Minister Benjamin Netanyahu's far-right cabinet. And this is the cabinet that has been considered the most far-right in the history of Israel. It's going to be seen as a broadside against Israel. It's going to be interesting to see how these are received. The first initiative is an executive order. It announces punishments against those Israeli settlers who harass or use violence against Palestinians. Now, we've already heard from the finance minister, Bezalel Smotrich, who is a settler himself, saying that this is essentially an anti-Semitic canard, the whole idea of settler violence against Palestinians. Now, that is certainly not true, because we've seen human rights groups reporting on this, and my own colleagues here at NBC have done multiple reports where they've seen this in-person harassment of settlers against Palestinians in the West Bank. The other initiative would be possibly recognizing a new Palestinian state That's something that has been in the works for multiple administrations and something that has eluded many presidents who have tried to do it in the past. That's because of resistance on all sides. And this is going to be a hugely ambitious initiative, especially if it's put before some sort of peace agreement is in the Gaza Strip. And of course, the Israelis are still pushing their effort to completely destroy Hamas, but empowering the Palestinian Authority, especially under new leadership. Now it's been led by Mahmoud Abbas, who has been in power for more than 10 years and has not faced elections in most of that time. He has well outworn his mandate. This will mean it entirely reinventing the Palestinian Authority, which now doesn't have authority over the Gaza Strip or many places in the West Bank. So again, we're talking about twin initiatives here, both of which seem to be siding with the Palestinians, both of which are going to meet massive resistance from here in Israel, from Benjamin Netanyahu's cabinet, and maybe even from far extremist Palestinians like Hamas, who are still very much active in the Gaza Strip, despite Israel's best efforts for months to try to unseat them from power.
All right, that is the latest from the conflict in West Asia. We're going to keep bringing you more on this. But for now, let's shift focus to Jharkhand, where Champai Soren has taken oath as the Jharkhand Chief Minister after Governor C.P. Radhakrishnan nominated him for the post. This comes after the ED arrested former Jharkhand Chief Minister Hemant Soren in a land fraud case. The Supreme Court refused to hear a petition filed by the former Chief Minister challenging the arrest. We have CNN News 18's Arunima, who's joining us with the latest.
It's a setback for Hemant Soren. He had gone to the Supreme Court challenging his arrest by the Enforcement Directorate, but the Supreme Court refused to intervene, saying you should have gone to the High Court instead. So now Soren will have to go back to the Jharkhand High Court, the Ranchi High Court, trying to argue that his arrest by the Enforcement Directorate under the Prevention of Money Laundering Act is unlawful. Meanwhile, the Enforcement Directorate is also hoping that Hemant Soren's custody of 10 days, as ED had requested, would be granted. The Ranchi Court, the special court in Ranchi, had sent Hemant Soren for 1 day's judicial custody, even though ED argued that they want to question him and confront him with a lot of evidence, and 10 days is required for that. So what is the evidence that the ED is talking about? They have told the court that they have crucial evidence in terms of recovery of chats and photographs from the mobile phone of one of the accused, Bhanu Prasad, in which it is clear that this former circle officer was in conspiracy and connivance with the then Chief Minister Hemant Soren. It also claims, the ED claims, that the Chief Minister's office sent him instructions to change land records in a fraudulent manner so that protected tribal land, protected defense land can be acquired by the Hemant Soren and his aides. 8.5 acres is what Soren stands accused of procuring wrongfully as part of this huge conspiracy. What the ED has also said is more than 36 lakh rupees recovered from Hemant Soren's Delhi residence could be proceeds of crime. They have mentioned in the court documents that they want to ask Soren what this cash amount was doing in his bedroom's cupboard here in South Delhi. So 10 days is what ED has asked for. It claims it has huge evidence against the former Jharkhand Chief Minister.
All right, thanks, Arunima, for that. Completely out of time on this edition of Business Lunch. Mid-Cap Radar comes up next. Thanks so much for tuning in.